Alright, hey everybody. Today we are going to be looking at the gold to SPX ratio. That's the gold price valued in the S&P 500. Alright, so you got gold at an all-time high. You've got the S&P 500 at an all-time high. We can go to TradingView and we can create a gold divided by SPX. That gives us the gold price valued in the S&P 500. If you want to know how to do this, just type in gold/SPX. It'll give you the ratio right here. Here you see the gold to SPX ratio from basically 1905. We hit as high as about 7.8. Basically, gold was 7.8 times more expensive than the S&P 500 index. Right now, we're at a 0.42. That means an ounce of gold costs 0.42 times the value of the S&P 500 index, which is about 51 something right now. In this video, I'm only going to focus on the last 20 years. Here you have the 2000 to 2011 bull run that we experienced. I'm going to turn on the drawings that I set up for this. So a lot of information here. I identified 4 different points in the last 20 years of the S&P 500. The highest one is the current. I don't really want to be over optimistic about this. I'd rather be realistic. When we look at the S&P 500, it is at all-time highs. I have no idea what I'm talking about, but I could see it not going higher. Current SPX 5165. This is I put these in a few days ago. I think it's a tiny bit lower today when I'm recording this. And then I took the 60-month moving average. If you want to know how to do that on TradingView, go to your S&P 500 index. Right now we have the SMA at a 200 period moving average. Go to settings, change the length to 60. That's where I got that number right there, 38.95. Go ahead and change that back because I prefer the 200. Alright, so the average of the last 5 years, which would be 38.95. The 5-year low, which would be March 2020 crash. The 20-year low, which would be the March 2009 crash, where we got down to about 720, back around here. Those represent what I would call a high, an average of the last 5 years, low of the last 5 years, and low of the last 20 years. It would be amazing to go back down to 720. I do not see this happening. I'm sure most of you don't see this happening. Now, a 5-year low, this is more realistic, though I think overall the 60-month moving average is probably fairly realistic. This, like I said, has only to do with the level of the actual S&P 500. These numbers here represent the different ratios. Like our current ratio right now is 0.42 right at this point. 0.42 times the current S&P 500 gives you the current gold price when I wrote all these a few days ago. The current gold to S&P ratio, 0.42 times 38.95, which would be the average of the last 5 years, gives you 1636. Obviously, that's not an unheard of gold price either. And then we get the two, what I would say, less likely lows of the S&P 500. And that's where we get these prices for gold, 924 and 302. All these red numbers around here, I think it's very unlikely that we see the S&P 500 that low. Alright, so 200-month average of the gold to S&P 500 ratio, which would be 0.7. If the S&P 500 is at its current level, we'd be looking at $3,600 gold. If the S&P 500 reverts to its 5-year average, then we're looking at $2,700 gold. The 5-year and 20-year low of the S&P 500, we'd be looking at $1,500 and $500. I have these in here just to be overly pessimistic because I feel when dealing with money, that is a smarter thing to do than to be overly optimistic. Let's look at the 2011 peak as far as the ratio goes. We had a ratio of 1.68. 1 ounce of gold was worth 1.68 times the S&P 500. Were we to get back to that ratio, we'd be looking at this set of numbers, depending on the actual S&P 500 chart. 8,600 at a high, about 6,500 for an average, and lows of 3,600 and 1,200. 99, we probably had around the lowest point in the last, I guess that would be 25 years of the gold to S&P 500 ratio. 1 ounce of gold would only buy you 0.18. So it would take you about 5.5 ounces of gold to equal what the S&P 500 was valued at back in '99. This is what I would consider a very low point. Probably the lowest you'd ever find the ratio. I mean, we can even look back here. Yeah, doesn't quite even get that low in the 60s, and sure doesn't. So you could actually say last 100 years of the S&P 500 to gold ratio, this is the lowest point. Bad news for gold. Obviously, see current S&P 500 level just shy of 1,000, 700 average, and the 5-year and 20-year low 400 and 130. This right here, I'd say it is a extremely long shot that you would ever see gold this cheap. In fact, gold hasn't been this cheap since, I believe, probably since about the late 70s, 77, somewhere in 77, sounds like. Yep, probably somewhere in 77. As you can see, that gives you an idea of where the gold price could be headed. When people are saying $5,000, $10,000 gold, that's not completely out of the question. Obviously, if gold is worth a lot of money, that means that something bad is probably happening, and everything else is probably expensive too. That's why gold is a good hedge, a good safe haven asset. And just for fun, let's go back to that 7.8 ratio that I pointed out at the beginning of the video and see what gold would be worth in that situation. If gold was 7.8 times the S&P 500 index and the S&P 500 was at its current price, you'd be looking at $40,000 ounces of gold. 30,000 for the 6-month average, or I'm sorry, 6-year average. 5,000 at a low, 17,000 at a 5-year low of the S&P 500. Nobody knows what's going to happen in the future. All we know is what happened in the past. That's what charts are good for. This is just a way to look at these things. Just a way to analyze past events to give you an idea of where it could be in the future. Just for fun, I'm going to add up all these numbers and divide them by 16 to get an average. Now, this is not scientific. It's just a way to get an average of these arbitrary numbers that I put on the screen. All right, and divided by 16 total numbers gives us a mean of these. And look at that, 2227, which is pretty close to where gold is at right now, which, among other evidence, is why I am of the opinion that gold is fairly priced right now. While it may be at all-time nominal highs, in the grand scheme of things, I think it's still appropriately priced right now. All right, hope you enjoyed this video. Hope this was useful. If you want to see more of this, watch it, like it. I'll probably make more anyway because I do this for fun. Please like and subscribe to the channel. Helps me out. We're all trying to make it out here. All right, everybody. Have a great day.